Good day, everyone, and welcome to another investing video on Moementum Finance channel. Today, we'll review 4 ETFs that allow you to invest more responsibly. ESG investing, or alternatively known as socially responsible investing, refers to investing in companies that exhibit favorable characteristics related to environmental, social, and governance issues. If you're passionate about investing more responsibly, here are the 4 ETFs that you can consider. Of the ETFs discussed, 3 of them are in US dollars and 1 ETF is in Canadian dollars. Before we continue this video, I have a favor to ask you. I've put a lot of time and effort to put this video together, and in return, I appreciate if you can give this video a thumbs up and subscribe to Moementum channel. Thank you. The first ETF to review is Vanguard ESG US Stock ETF with ticker symbol ESGV. This ETF tracks a market cap weighted index of US all cap companies screened for environmental, social, and corporate governance criteria. The fund excludes companies in these industries: adult entertainment, alcohol and tobacco, weapons, fossil fuels, gambling, and nuclear power. ESGV's index also uses UN Global Compact principles to exclude stocks of companies that don't meet standards for labor rights, human rights, the environment, and anti-corruption. ESG has over 4.9 billion US dollars in assets under management and an annual expense ratio of 0.12%, which means if you invest $10,000, you'll pay a fee of $12 in a year. This ETF consists of 1,495 holdings and is showing a year-to-date return of over 19% at the time of making this video. ESGV has a dividend distribution currently yielding 0.93% annually, and the top 10 holdings of ESGV include companies like Apple, Microsoft, Amazon, Alphabet, Google, Facebook, Tesla, Nvidia, JP Morgan, and Visa. According to MSCI ESG rating, which is designed to measure a company's resilience to long-term industry, material, environmental, social, and governance risks, the ESGV ETF has a rating of A. The highest rating is AAA, which is considered to be a leader in this field. The second ETF to review is iShares ESG MSCI USA Leaders ETF, the ticker symbol SUSL. This ETF tracks an index of US large and mid-cap firms with the highest ESG ratings, weighted by market cap within each sector bucket. SUSL has almost 3.8 billion US dollars in assets under management and an annual expense ratio of 0.10%, which means if you invest $10,000, you pay a fee of $10 in a year. This ETF consists of 273 holdings and is showing a year-to-date return of over 21% at the time of making this video. SUSL has a dividend distribution currently yielding 1.18% annually. The top 10 holdings for this ETF include Apple, Microsoft, Alphabet, Google, Tesla, Nvidia, Johnson & Johnson, Visa, Home Depot, Procter & Gamble, and MasterCard. SUSL ETF has an MSCI ESG rating of AA. The third ETF to review is Vanguard ESG International Stock ETF with ticker symbol VSGX. This ETF tracks a market cap weighted index of global companies, excluding US companies, screened for environmental, social, and corporate governance criteria. VSGX has almost 2.4 billion US dollars in assets under management and an annual expense ratio of 0.17%, which means if you invest $10,000, you'll pay a fee of $17 in a year. This ETF consists of 5,019 holdings and is showing a year-to-date return of almost 8% at the time of making this video. VSGX has a dividend distribution currently yielding 1.94% annually, and among the top holdings of VSGX include companies like Taiwan Semiconductor Manufacturing, Nestle, Alibaba, Toyota, and Samsung. VSGX has an MSCI ESG rating of AA as well. Lastly, the fourth ETF to review, which is traded in Canadian dollars, is Wealthsimple North America Socially Responsible Index ETF, the ticker symbol WSRI. This ETF seeks to track a passive basket of stocks maintained by a third-party index provider, Solactive. WSRI avoids companies that contribute to fossil fuel extraction and usage, are very carbon intensive relative to their industry, or are involved in coal mining or power generation. It also avoids companies involved in human rights controversies, for example, private prisons, defense contractors and weapon manufacturers, casinos, gaming, and adult entertainment companies, and also excludes companies that manufacture alcohol and tobacco. What's more, WSRI ETF avoids companies without gender diversity at the board level and vote against proposals that would take company board below the fund's targets. WSRI has a dividend distribution currently yielding 0.69% annually, and among the top holdings of WSRI ETF include companies like Vulcan Materials, Hydro One Limited, Take-Two Interactive Software, Coca-Cola, and General Mills. WSRI has almost $411 million Canadian dollars in assets under management and an annual expense ratio of 0.20%, which means if you invest $10,000, you'll pay a fee of $20 in a year. This ETF consists of approximately 150 holdings and is showing a year-to-date return of over 15% at the time of making this video. All of these ETFs can be traded through popular stock brokerage accounts, including Robinhood, M1 Finance, eToro, Questrade, and Wealthsimple. If you are a Canadian investor, you can use the referral links in the description of the video to open an account and get a referral bonus. So be sure to check them out. Are you currently investing in any exchange-traded funds? What are some of your favorite ETFs? Let us know in the comment section down below. If you'd like to learn more about investing in the stock market and following the latest news about hot stocks, including penny stocks, growth stocks, ETF investing, and dividend stocks, don't forget to subscribe to our channel. Here on Moementum Finance, we post several videos every week about investing and financial freedom. I appreciate if you can give this video a thumbs up, and I hope to see you next time.